1 మినిట్‌లో వచ్చేస్తుంది నాకు తెలిసి. ఇందాక ట్రై చేశాను ఆల్రెడీ నా దాంట్లో. కెన్ యూ ప్లీజ్ చెక్ వన్స్? Okay, hi, hello everyone. Well, first of all, very sorry for the technical delay yesterday. That we could not fix that. That's where we deferred that to today. And I'm pretty sure that most of you already got the news and update that ICA has postponed the exams from May to June. So I'm sure today we'll not have that question whether ICA will postpone the exams or not, because that question is already being answered by ICI in the meantime. So, friends, today I'm going to spend some good time with you guys to discuss a lot of interesting points about quick, key, important areas in our GST syllabus so that we get a complete, fair idea on how do we prepare for the exams. At the same time, how do we present in the examination? Because I always believe that there are two steps to succeed always. One, your preparation should be fantastic. At the same time, your execution in the exam should be very well. Whether preparation or execution, anything goes wrong, then we are out of the picture. So if our picture has to be fantastic, two things are very important. One, our preparation, planning, and everything. Second, our execution in the exam. Both should be in the right way so that we can come out with the flying colors. So, friends, in the course of our discussion of the key important areas in GST, whatever queries you have, whatever concerns you have, you please feel free to drop a message. I'll be more than free to answer. So I'll feel free to answer all your queries, whatever you have. Feel free to comment there and type there. We'll be definitely happy to answer that queries. Because I know most of you are sitting at home, and I'm sure that you are sitting at home. You should sit at home. You should definitely take care of yourself. And now let's take care of our subject called GST so that we are very clear on what we are required to learn and what we have learned. Right. Everybody who is there online with us, whether you have seen our classes or not seen our class or yet to see our classes, whatever category you belong to, we'll make sure that we discuss a lot of key important areas in GST. Friends, whether you are CA intern new syllabus or you are CA IPCC old syllabus, whatever it is, the syllabus of GST remains same for every one of you. We have totally got about 10 topics in our GST, starting from the basic till the returns topic. We have got some 10 areas which we are going to talk in detail. Right now, when I say in detail, we'll touch upon all the important key areas, and in that key areas, wherever you get it out, feel free to ask, guys. We'll definitely happy to reply. First, starting with the first topic, guys. The first topic, what you have is our GST introduction. GST India introduction. So basically, in that topic, you are required to learn about when GST has come into India. We all know that GST has come to India on 1st July 2017. And how can we forget that date of 1st July? Because that is our Chartered Accountants Day too. So we can't afford to forget that date. So now, coming back to the discussion now. In that particular topic, you should have some good idea and fair idea about the first country to bring GST in the world was France. And after that, they brought in way back in 1954. And after that, more than 160 countries have brought GST in their respective countries. And India has brought on 1st of July 2017. And on 1st of July 2017, GST was made applicable to all the states in India except Jammu and Kashmir. And Jammu and Kashmir has made GST applicable from 8th of July. So technically, with effect from 8th of July, that slogan called One Nation, One Tax. We have got that slogan called One Nation, One Tax. That slogan became successful from 8th of July 2017. And just talking for 2 minutes, the backdrop of how GST has come into light, for the simple fact and reason that prior to GST law, there were some taxes in India which were levied exclusively by central government, and there were some taxes in India which were levied exclusively by state government. But there was no tax which was levied by center and state together. So in order to give the dual power to both center and state to impose the tax on the same transaction, there was a need to give dual power. So for that purpose, there was a need to amend the Constitution of India. And my dear friends, in India, we have got Constitution 122nd Amendment Bill 2014. And the 122nd Amendment Bill 2014, subsequently, when it was passed by Lok Sabha, Rajya Sabha, and signed by President, that has actually become Constitution 101st Amendment Act. And I keep seeing that students keep asking me so many times, sir, how did 122nd become 101? Friends, let me highlight you that point, that 122nd is the bill number and 101 is the act. So 122nd Amendment Bill became 101 Amendment Act. The reason being very clearly that it's not necessary that every bill should become act, right? Because we all know the fact that every bill will become an act only when it is approved by Lok Sabha, Rajya Sabha, and then it is signed by President. That's very important. That's how a bill will become an act. So 122nd Amendment Bill has become 101st Amendment Act. These kind of things will come up in the exam in multiple choice. Take my word. And friends, let me tell you very clearly that students have an apprehension always that multiple choice question is something which will just mug up some 100 MCQs, 500 MCQs, and go to the exam and get ready A, B, C, D, A, B, C, D. We'll answer that way. But it won't work that way, because multiple choice questions are not something which you'll mug up and go to the exam. They are also purely conceptual oriented. In order to answer a multiple choice question or a theoretical question or a practical question, it is very important that you have a complete clarity on conceptual provisions and understanding of the every section, subsection, clause, subclause, and provisos. That's very important. That's where driven by question and answer oriented or multiple choice question oriented. Just be driven by concepts and your exam will be fantastic. That's very important. Now, coming back to my discussion, guys, 122nd Amendment Bill has become 101st Amendment Act. That's how the Constitution got amended in order to introduce GST into India. Because in India, GST is a dual GST model wherein center and state together will impose the tax. And let me tell you, under GST law, we don't have a word called purchase and sale, and we don't use the word called provided, rendered, and all. We only use a word called supply. And in supply, we have got two types of supply called intrastate supply and interstate supply. And on intrastate supply, we charge C GST and SGST. And for interstate supply, we charge IGST. And IGST stands for integrated GST. At CA inter level, in your syllabus, you don't have a concept that when a supply is called intrastate supply, when a supply is called interstate supply. That is there at CA final level. But let me tell you, you are required to know that in case of intrastate supply, you charge CGST and SGST, and for intrastate supply, you charge IGST. And let me tell you, there is a specific manner for the purpose of utilization of credit, wherein input IGST credit is used for output IGST, then for CGST or SGST in any order or any manner. Next, input CGST is used for output CGST, then for output IGST. Input SGST is used for output SGST and then for output IGST. But we can't use CGST for SGST, SGST for CGST. There are two important principles which I want every one of you to keep in mind whenever you solve a problem on set off of credit. The two important principles are: principle number one, that is CGST credit cannot be used for SGST, SGST credit cannot be used for CGST. Keep that point in mind very clearly. Second interesting important point you need to keep in mind is that CGST and SGST credit to be utilized only after IGST credit is fully exhausted. That means unless we completely use IGST credit, we should not use CGST credit and SGST credit. These two important principles keep in mind, and you can solve any problem on set off of credit. And generally, one question keeps coming in the exam where they give figures of input credit, they give figures of output tax, and you need to do that set off. That's very important. Yeah. So, a lot of students, we have got so many questions. Some of them are asking, what topics here? Obviously, here, come on, GST. What else we'll talk? Nothing else. Then, couple of friends are asking about link for GST amendment class. Friends, we already recorded the GST amendment class. A part 1 has already been released and is there on our Indigo Learn channel. And part 2 also is on the way. Even that will reach you very soon. Then, coming back to our discussion. Friends, in first topic, you need to keep in mind also the areas like France is the first country to bring GST. And in India, we have got a model called dual GST model, which we basically adopted from Canada. I mean, we always love that adopting model from different countries. So we have adopted the model of Canada country. We adopted that model called dual GST model, wherein center and state together will collect the tax. And GST is a destination-based consumption tax. That is, money will reach that state where the goods or services are consumed. It's a destination-based consumption tax. So that's an interesting point which you need to know. Yeah. So one of our friend Vishal is asking a question. Sir, does postponement mean tougher paper? I mean, postponement doesn't always mean tougher paper. It could be an easier paper also, or it could be same paper which is already set by ICI will be given in June instead of May. So all pros and cons. Guys, I always tell you that don't focus on whether paper is going to be easy or tough. My logic is always very simple. There is nothing called easy or tough. There are only two things called known and unknown. If you know, it's easy. If you don't know, it's tough. That's it. So don't believe in that word called easy or tough. Believe in the word called known or unknown. And try to know everything so that whatever paper comes, it's easy for us. So I'm sure, Vishal, your question is answered. Yeah. Coming back to our discussion. So in our introduction topic, guys, I also want you guys to focus on the area called GST Council, where you need to note Article 279A, that is GST Council is a committee which is formed by the government. GST Council is a committee formed by the government, wherein GST Council is a group of central and state level members who are basically going to sit and take decisions in relation to GST. Basically, could be in terms of change in rate of tax, could be in terms of exemptions or taxing some new things. So all different kind of things will be taken, and all decisions related to GST are taken by central government on the recommendations of GST Council. And let me tell you, GST Council consists of a chairman, and the Union Finance Minister will act as the chairman of GST Council. Then, and from every state, we have got state level representatives, and one of that representative will act as vice chairman. And when we talk about this GST Council, there are central level members and also state level members. Central, there are two members. One, Union Finance Minister. Second, Minister of State for Finance. Students keep thinking, sir, Minister of State for Finance means a state level person. Answer is no. His designation is Minister of State for Finance, but he is a central level person. So there are two central level guys. One, Union Finance Minister. Second, Minister of State for Finance. And from every state, there is a representative. And central members have a weight of, central members together have a weight of 1/3. State members together have a weight of 2/3. That means central says yes, that means 33% is done. State says yes, that means 66.67% is done. But a beautiful point they put in the law is that to pass a resolution, there should be 3/4 majority. That is, there should be 75% majority. So if you observe carefully, so beautifully they drafted, that is, central weight is 1/3. All states together, the weight is 2/3. But to pass resolution, there should be 3/4 majority. That clearly signifies to us that center alone or state alone cannot take any decision. If a decision has to be taken, then center and state together should join the hands. Only then resolution will be passed. Yeah, we have got a question from Seshadri. He asked a question, sir, a doubt. If setup has to be done first with IGST, then with CGST, if IGST is in shortfall, and last but not the least, SGST after CGST is exhausted. Good. I think his question is, how do we set off output IGST? If we have to set off output IGST, always it's very clear that first I'll use my input IGST, because I cannot use my input CGST, SGST unless I use my input IGST. That's very clear. Already I told the principle. So use your input IGST to set off output IGST. If you still have output IGST to pay, then you have to use your input CGST credit, then use your input SGST credit. This is an important principle. This is not an option what I'm giving you or you are giving to me. It's a principle given by the law. That's very important. You cannot afford to use CGST, SGST credit unless IGST credit is fully exhausted. That's very important. Keep that point in mind. Right, next. Coming back to our discussion. Next. So in our basic concepts, guys, I also want you guys to focus on areas like constitutional procedures, how the constitution has brought GST into India. And I also want you guys to focus on certain areas like constitution has got 7th schedule, in which constitution in 7th schedule, they gave 3 lists. The 3 lists are union list, state list, concurrent list. Union list contains the matters in which central government has got power. State list contains those matters in which state government has got power, and concurrent list contains those matters on which central and state together have got dual power. So please keep this point in mind. So these are the important areas you need to focus in your first topic, that is your basic concepts, guys. Moving forward, the second topic what you have in your syllabus is your concept of supply. And of course, a very important topic, 101% a question will come in the exam for sure, for minimum about 4 to 6 marks. In the concept of supply, I'm sure you all know that we have got 2 sections, that is section 7 and section 8. Section 7 deals with the concept of supply, and section 8 deals with the concept of composite supply and mixed supply. And I'm sure section 7 you would have already heard many a times. I really want you guys to focus especially on section 7(1)(c), read with schedule 1, which talks about transactions regarded as supply, even though there is no consideration. That is, consideration is not there, but still it is regarded as supply. So I really want you guys to focus on those areas, which is very important. Transaction regarded as supply, even though there is no consideration, in which you have got some 4 points, that is permanent transfer or disposal of business assets on which ITC is claimed, supply between distinct or related persons in the course or furtherance of business. Number 3, supply of goods from principal to agent. Number 4, import of services by a person from a related person or establishment outside India in the course or furtherance of business. Like this, we have got some 4 points in section 7(1)(c), read with schedule 1. Please make sure you focus on that. And one more important area called section 7(2)(a), read with schedule 3, where we have a concept called transactions which are neither regarded as supply of goods nor regarded as supply of service, like services by employee to employer, court or tribunal, funeral, burial, crematorium, mortuary. Like this, we have got different points there that I want you to focus upon. Actionable claims other than betting, gambling, lottery, sale of land and building. Like this, important elements are there in section 7, which you have to focus for sure. Then, let's answer a couple of questions what our friends are having. We have got a question from Hari Prasad. Sir, if any late fees and interest is applicable for GST, is this kind of questions is chances to ask in questions. So I think he's asking about a question where late fees and interest will question come in the exam. Let me tell you, the interest is there in our syllabus, wherein we have a chapter called payment of tax. In that, we have got a concept called interest dealt by section 50, wherein you have got two things to remember. That is, in case of late payment of tax, we have got an interest of 18% per annum. And in case where excess credit is availed or less output tax is shown, we have got interest at the rate of 24% per annum. On this question can come in the exam, highly possible. And for late fees, we have got a section called section 47. That's there in our returns chapter, where we have got a late fees of 100 rupees per day of default, subject to maximum 5,000. Practically, it's slightly different, but that's our as per act which can come in the exam. 100 rupees per day, subject to maximum 5,000. And for annual return, that is GSTR 9, the late fees is 100 rupees per day, subject to maximum of 0.25% of turnover. And this is given in C GST Act. And similar thing is there in SGST Act also. So that figures will double. Next, we have got a question from our Manjushri Mohan. Sir, how to claim input in the following criteria? The person registered in Karnataka and have a co-working place to an employee in Jaipur, and landlord is charging CGST and SGST. Good, an interesting question. So let me tell you, we all know the fact that registration under GST law is not centralized, that is state-wise. That is, we are required to obtain registration state-wise but not centralized. Every state we take separate registration. So if you have got business in different states, you will take registration in different state. In one state also, if you have got multiple places of business, you can take separate registration. But one thing is there, if you are registered in one state, you can take credit of CGST, SGST, what you pay in that state. And you can also take credit of IGST. But you cannot take credit of CGST, SGST paid in different state. That is not allowed. That means if Shiva Teja is registered in Telangana state and I go and pay CGST, SGST in Maharashtra, I cannot take credit of that in Telangana. That's not possible. If it's IGST, I can take credits. Next, we have got a question from Dev Prashant. Which are the states are to be considered as special category state? Dev, please be very clear on what is a special query as to in which case, because special category states we have got totally 11 as per constitution, but for registration chapter we have got only 4: Manipur, Mizoram, Nagaland, Tripura. And for composition scheme we have got totally 8. So in different case, we have got different special category state. So you be specific on what is your particular case, what you're asking. Next, one question from PEP GTS. I'm not sure who is he. Service as per GST is anything other than goods, money, and securities, which shows supply of immobile property is covered under category of service. Friends, a good question. Let me tell you guys, in relation to service, the word goods is defined by section 252, which says that goods cover every kind of movable property other than money and securities, but includes actionable claims. And service defined by section 2102 specifies that service means anything other than goods, money, and securities. That means everything will come in service, which is not goods, which is not money, which is not securities. So they have clarified that renting or hiring or leasing of a property will come under service. But sale of land and building is specifically covered in section 72A, read with schedule 3, which says that sale of land and building is neither regarded as supply of goods nor regarded as supply of service. So in that case of sale of land and building, GST will not apply. Guys, a small request from my side, that is, friends, please do one thing. Please keep asking questions on a particular topic what we are discussing, because some students are asking questions on e-way bill, some are shifting towards input tax credit, some are towards time of supply, value of supply. Let's talk topic by topic I'll discuss. So in particular topic, whatever query you have, you please keep asking. And all other queries which are different will clarify at the end of the session. Definitely I'll answer all your queries. Don't worry. Yeah. But on a particular topic, what we're discussing, any questions you have, feel free to ask. So friends, in supply topic, I also really want you guys to focus on some more important areas in supply, that is special issues in the concept of supply. That is, I want you to also remember the concept that in case of artworks sent by artist to art gallery, it is not regarded as supply because no consideration flows from art gallery to artist. But supply actually takes place only when a particular buyer comes to the art gallery, selects a particular art and takes that art. That's important. Next. Coming to our section 8, composite supply and mixed supply. Friends, I'm sure most of you know this concept, but still let me reiterate that. That is, composite supply is a supply wherein section 230 defines composite supply, which specifies that composite supply is a supply where two or more taxable supplies which are naturally bundled and one of which is a principal supply. And principal supply is defined by section 290, which specifies that principal supply is that supply which is predominant in nature and others are ancillary. And laws clearly specify that composite supply is taxed at the rate of principal supply. Composite supply is always taxed at the rate of principal supply, whereas mixed supply is taxed at highest rate. Mixed supply is that supply which is not naturally bundled. And I always say an example for mixed supply is a box of cashews, almonds, pista packed in a box, which is not naturally bundled and it cannot be called composite. So definitely I'll call it as mixed supply and I'll tax it highest rate. And generally, guys, in case of composite supply, what is principal supply will specifically depend upon facts and circumstances of each case. That's very important you need to keep in mind. So friends, these are the important areas in the chapter called supply, wherein there is a high possibility that a question will come up in the exam where they'll test you on the concept of supply. Please keep that in mind. Moving forward, guys, let's talk about composition scheme. Something very important which you need to focus upon, guys. Let me tell you what is that. Friends, composition scheme, as you all know, composition scheme applies only to those persons whose aggregate turnover during preceding financial year does not exceed 1.5 crores. That is, if turnover during preceding financial year does not exceed 1.5 crores, only then current year he can opt for composition scheme. That is, if turnover during 18-19 does not exceed 1.5 crores, then only then 19-20 he can opt for composition scheme. But in case of 8 special category states, the limit is not 1.5 crores, the limit is 75 lakhs. And let me tell you, my dear friends, we have got 8 special category states, in which cases the limit will not be 1.5 crores, the limit is actually 75 lakhs. When I say limit, that limit stands for aggregate turnover. And let me tell you, we have got totally 11 special category states, as per Constitution of India. That is Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Arunachal, Himachal, Uttarakhand, Jammu and Kashmir. But for the purpose of registration topic, we have got only 4 special category states in section 22, that is Manipur, Mizoram, Nagaland and Tripura. And in composition scheme, we have got only 8 states, which does not cover Uttarakhand, Jammu and Kashmir, Himachal Pradesh. Other things are covered there. We have got a question from our friend Kailas. Sir, what if some consideration is received for exhibiting an artwork? Does GST will attract? A good question, guys. Come on, let me look at that. Sir is asking a question, Kailas is asking a question. So what if some consideration is received for exhibiting an artwork, does GST will attract? So let me tell you, whenever an artist is sending artworks from his place to art gallery for exhibition purpose, generally no consideration flows from art gallery to artist. So in that case, GST will not attract. But if any consideration flows, then definitely GST will apply. No doubt about it. I'm sure, Kailas, your question is answered. Now, coming back to our discussion, guys, in composition scheme, I was mentioning to you that composition scheme will generally apply to only to those whose aggregate turnover does not exceed 1.5 crores in the preceding financial year. But in case of 8 special category states, that is Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. These 8 special category states, the limit is not 1.5 crores, the limit is 75 lakhs. And if you go for a composition scheme, what is the benefit you are going to get? Number one, you are going to pay tax at a very less percentage. That is, you will just pay tax at the rate of 0.5%. That's it. Only 0.5% you will pay tax. In case of manufacturers and traders, it is just 0.5%. But in case of traders, it is 0.5% of taxable turnover. And in case of restaurant and catering, it is 2.5% of turnover. That a very small rate, you end up paying tax. And an important point to be noted is that you end up paying tax at a very small rate, but you cannot take input tax credit. Friends, first of all, you are paying tax at such a small rate, and how can you expect to get input tax credit? Obviously, you will not get input tax credits. And that tax you will not pay on a monthly basis, you will pay that tax only on a quarterly basis. This is a very good scheme. Practically, I've seen so many cases where many of the persons have opted for a composition scheme, particularly for the fact and reason that they'll pay tax only on a quarterly basis, but not on a monthly basis. It's a very good relief given by the government, but applies only to those whose aggregate turnover does not exceed 1.5 crores in the preceding financial year. And the scheme is not mandatory, guys. The scheme is only optional. And let me tell you, no service provider, I repeat one more time, no service provider can opt for composition scheme except person engaged in restaurant and catering services. That means no person engaged in supplying services can opt for composition scheme except restaurant and catering service provider. That means, sir, let's take an example now. This very important concept. High possibility question will come. Listen carefully. Let's say there is Shivateja, who is a chartered accountant, who is providing chartered accountancy services. I actually cannot opt for composition scheme for the fact and reason that composition scheme is only for manufacturers, traders, restaurant and catering service provider. No other service provider can opt for composition scheme except manufacturer, traders, restaurant and catering service provider. But let me tell you, there is a high possibility that there is a trader. I repeat one more time. There is a trader, apart from doing trading activity, he is also doing some interior designing service. Is that possible? Highly possible. That means he is doing a trading activity also. He is doing some other service also, which is not restaurant. So what law told is that they give a small benefit, telling that a manufacturer or a trader or a restaurant or catering service provider can continue in composition scheme even if they provide some other services up to a value of 10% of turnover in the state in the preceding financial year or 5 lakhs, whichever is higher. Now, what does that mean? Let me give an example to get full clarity on this. Let's say, sir, I'm a trader, right? I'm a trader. My turnover during 18-19 is, let's say, 80 lakh rupees. And in 19-20, I opted for composition scheme. Can I opt for composition scheme? Yes, because me being a trader, I can happily opt for composition scheme. So for 19-20, I opted for composition scheme. And in 19-20, apart from trading activity, I want to provide some other service, which is not restaurant. Then law told, my dear Shivateja, provide some other service, provided that some other service is up to a value of 10% of turnover in the state of last year. That is how much? 10% of 80 lakhs. That is 8 lakhs or 5 lakhs. Whichever is higher, that means what? 8 lakhs. That means even though you are providing some other services, you can still continue under composition scheme, provided that some other service is up to 10% of turnover in the state in the preceding financial year or 5 lakhs, whichever is higher. You can still continue under composition scheme. Now I have an interesting question. Very, very interesting question. Listen, guys. Sir, I'm Shivateja, chartered accountant. I'm not a manufacturer. I'm not a trader. I'm not restaurant and catering service provider. I'm only a chartered accountant. and I'm providing only chartered accountancy services. I'm not providing manufacturing activity. I'm not doing trading activity. I'm not doing restaurant and catering. I'm only a chartered accountant. First of all, can I opt for composition scheme? 100% answer is no, because no service provider can opt for a composition scheme except restaurant and catering. Now, don't tell me, sir, sometime back you told about the story of 10%. That story of 10%, 5 lakhs is only for those who are doing manufacturing, trading, or restaurant. Along with that, they are providing little bit of services. Lot told, okay, enjoy. But my case is different. I'm only a chartered accountant service. I cannot go for composition scheme. So for persons like me, government has brought notification number 2 by 2019, dated 7th March 2019, where they brought an interesting concept that any service providers who are unable to go for composition scheme, they can opt for this notification. If they opt for this notification, they'll pay tax only at the rate of 3% plus 3%. That's it. Of course, they can't take input tax rate and all, that's for sure. Now, one point is that this notification number 2 by 2019, this notification number 2 by 2019 will apply only for those whose aggregate turnover during preceding financial year does not exceed 50 lakhs. If their aggregate turnover during preceding financial year does not exceed 50 lakhs, current year they can opt for this notification and they'll pay tax at the rate of 3% plus 3% till the time they don't cross 50 lakhs. That's a beautiful point. Very interesting. Next, let's answer a couple of questions from our friends. One question from Akanksha. A person supplies taxable goods from Maharashtra and alcoholic liquor from Manipur. What will be turnover limit? Thank you, sir, in advance. Maybe I think Akanksha, you're talking about registration topic. I'll come to the topic very soon. When I go there, I'll answer your question because there's an interesting point you need to know about the definition for aggregate turnover. Next, one question from Dwaraka. Sir, value of supply by way of exempt service by way of extending loans or advances in so far as consideration is by way of interest or discount is included or excluded in aggregate turnover? A very good question. Very interesting question. Let me answer that. So let me tell you, in general, aggregate turnover is defined by section 2(6), which covers all taxable supplies, exempt supplies, intrastate supplies, and exports on all India basis under same PAN. That's what is covered in aggregate turnover. Now, one point they told is that value of exempt service, where that is by way of extending loans or advances, where the consideration is interest or discount. That is, we give loans to somebody on which we get interest. That's the service activity what you are doing. So they clarified that this particular turnover will not be included for the purpose of calculating aggregate turnover. So Akanksha, so Dwaraka, for your question, the answer is that interest or discount is not included in the aggregate turnover. Next, one question from Kanan. 3% plus 3% service providers who are not eligible for section 10 can opt for turnover up to 50 lakhs. Yes, that's what I was talking about. Notification number 2 by 2019 dated 7th March 2019, wherein those persons who cannot opt for composition scheme can opt for this, provided their aggregate turnover during preceding financial year does not exceed 50 lakhs. Next, one question from Vittal. Only supplier services cannot opt for composition scheme, but he can opt 3% optional rate. Yes, obviously. Danush, who and all persons are applicable for notification? Any person can opt for that notification, provided your aggregate turnover does not exceed 50 lakhs during preceding financial year. If aggregate turnover in the preceding financial year exceeds 50 lakhs, obviously you can't opt for this notification. Composition scheme turnover limit is 1.5 crore, but this notification turnover limit is only 50 lakhs. Keep that in mind. Next, one question from Madhu. Sir, will you please give an example for 3% notification? That is what I was talking with you, my dear friend. If I'm chartered accountant, let's say my aggregate turnover during preceding financial year is, let's say, 40 lakhs. 40 lakhs. Current year, can I opt for the notification? Yes, I opted. Fantastic. And current year, my turnover is 45 lakhs. On that 45 lakhs, I'll pay tax at the rate of 3% plus 3%. That's all. Very simple. Same like composition scheme only. But difference is rate of tax there is less, but here it is 3% plus 3%. That you have to keep in mind. Next, moving forward, guys. That's about composition scheme, which you need to keep in mind for sure. which is very important, guys. Please make sure that you focus a lot on composition scheme. High possibility one question will come in the exam. And in fact, this composition scheme concept is given in the chapter called Charge of GST. In Charge of GST, you're also required to know about reverse charge mechanism, wherein what are all the services which are covered under RCM, like GTA, legal services, sponsorship services, then services by government. We have got security services. So many points are there in RCM. I really want you guys to focus a lot. What are all the services covered under RCM? High possibility one question will come in the exam. Next. One question from our friend Dwaraka. And before Dwaraka, we have got a question from Seshadri. Sir, is 2 by 2019 can intrastate supply of services be done? So let me tell you, in case of composition scheme, we cannot do intrastate outward supply of goods, but we can do intrastate inward supply. Any person engaged in intrastate outward supply of goods cannot opt for composition scheme. In the same manner, any person doing intrastate outward supply cannot opt for notification also. Then we have got a question from Danush. They say on first supply of 50 lakhs, what is that, sir? So let me tell you guys, first supplies is what? So let me tell you, let's take an example. There is one person, Mr. X. He is unregistered person. Okay. So far he has not taken registration because his turnover did not cross 20 lakhs or 10 lakhs or 40 lakhs, whatever category it is. He did not take registration at all. Right. One fine day, he crossed turnover of 20 lakhs. And after he crossed 20 lakhs, he has to apply for registration. Now there is a possibility that he can take registration under notification 2 by 2019. If he take that registration and after taking that registration, let's say he made more 20 lakhs turnover. Totally how much he made? 40 lakhs he made in the year. When he made 40 lakhs in this year, for the purpose of calculating aggregate turnover is 40 lakhs. But when he has to pay the tax of 3% plus 3%, he will pay 3% plus 3% only on subsequent 20 lakhs, but not on first 20. Where he was not liable to be registered, on that turnover, we will not pay that 3% plus 3% tax. I hope you are clear. So one more time I repeat. So if turnover is 20 lakhs, after that you made 25 lakhs more, total you have done 45 lakhs. When you calculate 3% plus 3%, you will not pay tax of 3% plus 3% on first 20 lakhs. You will pay that 3% plus 3% only on 25 lakhs. Because for the first 20 lakhs, you are an unregistered person. Then why you are required to pay that 3% plus 3% tax? Obviously, very clear point. Next. We have got a question from Amal Sasidaran. What is the benefit that a person can derive from 3% scheme if he is not able to opt for composition scheme? See, this notification 2 by 2019 is not mandatory. It's only optional. If you want to opt, you can opt. If you tell, no, I don't like this notification, I don't want this, only leave it off. You might ask, what benefit will come? If you go for this, you will pay tax on quarterly basis. You will not take input tax credit. Straight away, you will take turnover into 3% plus 3%. That's all. And you pay the tax to the government. That too quarterly. Quarterly, you will pay. Every month you can relax. You will get up and pay tax. So that way it's very beneficial for you. Next. One question from Kanan. So when you come to ITC chapter, please discuss section 18. We'll talk very soon. Verma is talking about aggregate turnover includes exempt supply. Then why exempt service is not considered in aggregate turnover? Let me tell you, exempt supply is definitely covered in aggregate turnover. But in composition scheme, one relaxation they are given is that interest or discount, only that particular exempt service is not covered in aggregate turnover. Not that every exempt service is not covered. Only that particular thing is not covered. Next, one question Vittal is asking, restaurant charge 2.5% rate, then it is composition scheme, but they are collecting from customers. Is it correct or not? So let me tell you, the problem with restaurant and catering is that in case of restaurant, whether they go for composition scheme or not, practically the rate is 2.5% only. So by going to the restaurant, we really cannot identify whether they're in composition scheme or not. So by seeing the bill, in the bill if the GST is there, that means they are not in composition scheme. If GST is not there, that means they are in composition scheme. But how do we definitely know that? That's a very practical question mark, which we really cannot answer, that whether they're in composition scheme or not. That we need to again cross-check with the GST side only. Okay, that's about different points in composition scheme, guys. I'll move forward. Next, charge of GST. I just told you that. Yeah, charge of GST. I just told you that it's important that you definitely need to learn that RCM. What are all the list of services covered under RCM? Please make sure that you focus a lot on the list of services covered under RCM. Moving forward, guys, we have got one topic called exemptions in GST. Please make sure that you just go through that list of all the exemption from GST. Students keep asking me that question, sir, should I mug up all the list of exemptions? It's not necessary that you need to mug up all the exemptions. Just read them once, have a fair idea as to what are all exempt, what are all taxable, so that when you go to the exam, you'll be in a good position to answer them whether they're exempt or taxable. Don't think that ICA will give a question 25 marks. Come on, write 25 points. They'll not ask you a question like that. But they'll give you some scenarios and situations where they'll check with you whether it's exempt or not. You should have a fair clarity of thought whether it's exempt or not. That's what you need to answer. So please just go through once the list of exempted services. That's important. Next. Move forward, guys. We have got a brilliant topic called time of supply next. And in time of supply, in your level, we have got two sections, that is section 12 and section 13. Section 12 deals with time of supply in case of goods, and 13 deals with time of supply in case of services. And in both cases, we have got 6 subsections, 12.1 to 12.6, 13.1 to 13.6. That's important to know. Especially make sure that you remember the important concept in exam, that is in case of goods, we are not going to pay GST on advances. Once upon a time, we used to pay GST on advances in case of goods. I mean, even today we pay GST on advances when it comes to services, but not on goods. In case of goods, we are not required to pay GST on advances. But in case of services, we pay GST on advances. But in case of goods, we do not pay GST on advances. Because under GST law, in case of goods, time of supply will come as per section 12.2, which specifies that time of supply is straight away date of invoice. And date of invoice means actual date of invoice or last day when invoices ought to have been issued under section 31, whichever is earlier. And when invoices ought to have been issued under section 31, which talks about based on different type of goods. For example, in case where there is movement of goods on or before date of removal, and in case where there is no movement of goods on or before date of delivery or make available, and in case of goods sent on approval basis at the time when supply takes place or 6 months from date of removal, whichever is earlier. So like this, important points are there which I want you to keep in mind. And please make sure that you remember 12.3 also, that is about RCM. In case of RCM, in your syllabus you don't have the list of goods covered under RCM, but you have got the concept of time of supply for goods covered under RCM. Please make sure that you remember that. It's just very simple. It's just 3 dates. That is date of receipt of goods, second one date of payment, third one 31st day from date of invoice. These 3, whichever is earlier, that becomes time of supply in case of goods covered under RCM. But when it comes to service under RCM, it is date of payment or 61st day from date of invoice. These 2, whichever is earlier. So in goods, we have got 3 dates, and in services, we have got 2 dates, whichever is earlier. That becomes time of supply. And in 13.2, that is time of supply in case of services. Please remember the concept that in case of services, we have got an interesting point which says that in case of services, if invoice is issued within time, then time of supply will be date of invoice or date of payment, whichever is earlier. But if invoice is not issued within time, then time of supply will be date of completion of service or date of payment, whichever is earlier. And within time is given by section 31, which says in general it is 30 days, but in case of banks and all, it is 45 days. Keep that important point in mind. Next, before I proceed further, please make sure that you remember section 12.4, 13.4 also, that is time of supply in case of vouchers, which says that if supply is identifiable, then time of supply will be date of issue of voucher. And if supply is not identifiable, then time of supply will be date of redemption of voucher. Keep that important points in mind. So these are the key areas when it comes to time of supply. We have got a question from our friend, that is Sachin. When a registered person makes a supply of taxable goods to a non-registered person, What is the treatment in GST? What is the treatment in GST? He will collect GST and pay to the government. That's all. Is supplier registered or not? Yes. So collect GST and pay. What difference it makes that receiver is unregistered? If receiver is unregistered, we call the transaction as B2C. If receiver is registered, we call it as B2B. As simple as that. Next, after time of supply, we have got a topic called value of supply. In value of supply, I really want you guys to focus on important area, that is only one section called section 15, wherein 15.2, 15.3 are very important. 15.2 talks about inclusions, 15.3 talks about exclusions. I really want you guys to have a complete clarity on what all will include in transaction value, what all will exclude from transaction value. And high possibility one question will come. Why possibility? Almost every time question is coming from value of supply. Every time, sir. 100% almost I have seen all the papers till date. Every time a question has come on value of supply. So please get ready to answer the topic of value of supply. Now, in value of supply, guys, let me tell you that in value of supply 15.2 inclusions, we have got 15.2 A, B, C, D, E, which says inclusions 15.2 A, all taxes, duties, cess, fee, except GST. Add that 15.2 B, supplier's obligation in relation to supply met by recipient. Then 15.2 C, all incidental expenses or anything charged by supplier from recipient, even that we'll add. 15.2 D, any interest, late fees, penalties charged by supplier from recipient, even that will include. Then 15.2 E, any subsidy. This point is very clear, and in exam they're playing a lot. Listen, any subsidy linked to the price except subsidy from central government or state government. That means if a subsidy is received by a person, that is included in the value of supply. Person means I'm talking about supplier, obviously, come on. If a supplier receives any subsidy, that is included in the value of supply. But if subsidy is coming from central government or state government, then it is not included in the value of supply. That's very important that you note this point, which is extremely important, that any subsidy linked to the price is included in the value of supply except subsidy from central government or state government. So in the question, if they give subsidy from central government or state government, don't include that. Any other subsidy, definitely you have to include. Then 15.3, guys, exclusions. In exclusions, you have got only 2 points. One, discount recorded in the invoice. Second, discount given after supply is made. I repeat again, discount given after supply is made based on agreement existing at the time of supply, and it is linked to the invoice, and proportionate credit is reversed by the recipient. What is this? Let me take a minute time. First, let me tell you, generally discount is given when at the time when supply is done. In invoice will show 1 lakh rupees bill, 10% discount, 10,000, balance 90,000. That is what we generally do. But this point talks about discount is given after supply is made. So after supply is made, we are given discount. But it is based on agreement existing at the time of supply. That means starting only when supply is done, that time only agreement is there that tomorrow I'll give you this much discount. Then in that case, that discount also can be reduced. Keep that point in mind. So these are the interesting elements what you have got in this topic called value of supply, my dear friends. Please make sure that you learn this very clearly. So friends, we have completed topics like I discussed with you supply, I discussed with you GST introduction, I spoke about time of supply, I spoke about value of supply. Now let me move on to an interesting topic called registration, guys. One such topic which generally keeps coming in the exam every time for 4 marks. And let me tell you, this topic is really interesting and important, guys. That is, when I talk about the registration, guys, the registration topic is dealt from section 22 to section 30, wherein section 22 talks about persons liable for registration, 23 talks about persons not liable for registration, 24 talks about compulsory registration, 25 talks about procedure for registration, 26 talks about deemed registration, 27 talks about concept of CTP and NRTP, 28 talks about amendment of registration, 29 talks about cancellation, 30 talks about revocation of cancellation. In those topics, let me tell you guys, the major important topics and the major important sections which you need to have clarity upon is something like this. One, who are liable to be registered? That is, when I talk about registrations, in general, registration is mandatory only when aggregate turnover exceeds 20 lakhs. But in case of 4 special category states, the limit is only 10 lakhs. That is Manipur, Mizoram, Nagaland, Tripura. These 4 states, the limit is only 10 lakhs. And let me tell you, in case of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, and Telangana, the limit is actually 40 lakhs. I repeat again, sorry. In case of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana, in the 6 states, the limit is only 20 lakhs. That is, registration is mandatory only when aggregate turnover exceeds 20 lakhs. But in all other states, apart from that 4, apart from the 6, registration is mandatory only if aggregate turnover exceeds 40 lakhs. But this 40 lakhs will apply only in case of goods. That is, a person is engaged exclusively in supply of goods. If it is only service, then the limit is 20 lakhs. Goods and services both, again the limit is 20 lakhs. If it is only goods, then only the limit is 40 lakhs. So different states, they have given limits. That is actually, originally the point in the law was only 20 lakhs, 10 lakhs. But subsequently, central government gave power to different states, telling if you want to increase the limits. So states have done different limits. And that's where now we have to remember different state, different limits. That's important. Next, guys, coming back to discussion. In 25, I want you to remember the procedure for registration, which is very important. Please make sure that you remember the concepts like REG01, we'll make an application. Then we get certificate in REG06. Remember that. An important point I want you to remember is whenever you want to get registration done, you will make an application. And once you make an application, just a second, guys. Yeah. So once you make an application, my dear friends, within 3 working days, proper officer may either accept your application and straight away grant registration, or there is a possibility where within 3 working days, PO may have a query. He might give a notice. So within 3 working days, PO may either directly approve and grant registration, or he may raise a query. If he is raising query, he will give a notice. And he will give 7 working days time to us to reply. And once we reply, within 7 working days, proper officer will either accept or reject. So let me tell you, my dear friends, if within 3 working days or within 7 working days, there is no response from the proper officer, then the application for registration is 27. I want you to know this 27 also very important. That is the concept of CTP and NRTP, wherein CTP is somebody who is already registered, in some other state, For example, a person registered in Maharashtra, he wants to go to another state like Gujarat, and he wants to do business there in Gujarat for a temporary period of time, maybe for some exhibition. So in that case, instead of taking normal registration, law specified that you can take registration of CTP, which stands for Casual Taxable Person, which is very common in case of exhibitions. And the registration of CTP is valid only for a period specified in the application or 90 days, whichever is earlier. And the set period of registration can be further extended for another maximum 90 days, subject to payment of advance deposit of tax. Under GST law, this is only one such registration, that is CTP or NRTP, where in order to get that registration, we are required to pay advance deposit of tax. Next, 28, guys, amendment of registration. There's something called core fields, non-core fields. In case of core fields, we need to take permission from proper officer. That means we'll make an application, then PO will check and approve. Non-core fields, directly they'll approve. And core fields are something like legal name, trade name, principal place of business, additional place of business, details of partners, karta. They are called as core fields. Clear? Next. Moving forward, guys. So without any more delay, I want to start this topic called input tax credit, something very important and very interesting, which I'm sure most of you guys know very clearly that this is one such topic which will definitely keep coming in the exam generally for 8 to 10 marks. So let me spend some good time on input tax credit now. So input tax credit, guys, at your level, in your syllabus, you have got three sections. That is section 16, section 17, section 18. Each section by section we'll talk so that we are very clear on what every section is talking about. First, section 16 talks about eligibility and conditions to claim input tax credit. Sixteen talks about eligibility and conditions to claim input tax credit. Wherein, my dear friends, let me tell you, under section 16, we have got four particular conditions in order to claim input tax credit. Excuse me. Sorry. Yeah. Under section 16, guys, we have got four conditions in order to claim input tax credit. That is, number one, receiver should have a tax paying document. That generally means an invoice. Number two, supplier must have paid tax to the government. That's a very crazy point wherein they say that recipient can take credit only when supplier pays tax to the government. Third, receiver must receive the goods, services, or both. For a last condition, receiver must file return. So basically, guys, there are four conditions in order to claim input tax credit. Number one, receiver must have a tax paying document. Receiver must receive goods, services, or both. Number three, supplier must pay tax to the government. Number four, receiver must file the return. Only when these conditions are satisfied, only then receiver can take input tax credit. And please keep in mind, if the goods are received in lots, then credit can be taken only upon receipt of last lot or installment. That's one important point, keep in mind. Second important point, guys, in case of capital goods, I repeat again, in case of capital goods, if depreciation is claimed, we all know what is capital good, nothing but an asset. And an asset, in income tax, we capitalize the asset and take depreciation. So what is the interesting point here is that they specified that in case of capital goods, for example, you purchase an asset for 10 lakhs. On that tax is, let's say, 18%, 1.8 lakhs, total 11.8 lakhs. Under Income Tax Act, if you have taken depreciation on 11.8 lakhs, then you cannot take input tax credit. If you want input tax credit, then take depreciation only on the cost, but don't take depreciation on the tax amount. If depreciation is claimed on tax amount, then input tax credit is not allowed. Such a beautiful point. That means they are trying to tell either take benefit in income tax or take benefit in GST. Why should I give you double benefit? And under GST law, we have got a beautiful point. That is, for capital goods, there's nothing called take credit in parts. We can take credit at a time. Full credit we can take at a time. So friends, we have got some good questions rolling. So let's answer a couple of questions, then we'll move forward. We have got a question from Sybil. Whether, sir, tax refund mechanism for UN-like organizations, please give an example. Good question. So let me tell you, under section 25, procedure for registration. Generally, whenever we get registration done, we get something called GSTIN, which stands for GST identification number, which is the 15-digit alphanumeric code. But in case of United Nations bodies, UN bodies, and in case of consulate or embassy, these guys are not given GSTIN. Instead, they are given UIN, which stands for Unique Identification Number. Now, you might ask a question. So, what do these guys do with that? Technically, we call them as UIN holders. These UIN holders will not pay any output tax, but whatever input tax they pay, that they'll happily take a refund. For example, if I provide any service to any embassy or consulate, I will charge GST. That GST, those guys will subsequently claim refund. For that purpose, they are specifically recognized as UIN, but not as GSTIN. Next, we have got a question from Amlesh. Sir, ITC of SGST, it is to be utilized only after full utilization of ITC of CGST. It is true or false? Good. Sir, if you have to pay output IGST, Amlesh, focus please. If you have to pay output IGST, first use your input IGST, then use your input CGST, only then use input SGST. That is, you can't use input SGST for output IGST unless you use input CGST for output IGST. That's important. That means if you have to pay output IGST, first use input IGST, then input CGST, then only input SGST. Next, we have got a question from Neena Narayanan. Sir, in the case of CTP, is mandated to have normal registration in any other state? If a person does not have registration in any other place, want to do an exhibition, can you take registration as CTP? A good question. So let me tell you, CTP is actually defined by section 220, which says CTP means any person who is engaged in supply of goods or services or both in a place or in a state or UT where he has no fixed place of business. That means in some other state, he has already got some fixed place of business and registration. That's very clear. So the concept of CTP only will come wherein you are there in some other state and you want to go to another state, and in that another state, you want to do business for a temporary period. So logically, that will apply only for those who are registered in some other state. Next. One question from Vittal. Processor for registration. I mean, he's talking about procedure for registration. Is it important from exam point of view? Definitely yes. That's where I spend so much time. Then, one more question from Amal. Sir, is it beneficial to claim input tax credit on cost or taxable amount in case of income tax, or it depends on circumstance? Obviously, it's better to take input tax credit, man. Because if you take input tax credit, at a time you'll get the complete benefit. Under income tax, if you take depreciation, it will come over a period of time. Under GST, at a time you can take full credit. So obviously it's beneficial, right? So we want everything at one spot. Next. One question from Sahana. Is it important to know the computation of ITC on capital good and input service, or only theoretical idea is enough? Obviously, theoretical idea is not just enough. You should have a clarity of thought on how do we do that. Okay, coming back to my input tax credit discussion. Wherein I just done about section 16. Balance questions we'll answer soon. Next, section 16 talks about eligibility and conditions to claim input tax credit, wherein we clearly discussed what are all the conditions we have got to take input tax credit. Then guys, before I talk section 17 now, section 17 is a very, very interesting section. Why? I'll tell the reason first. Listen. Section 17 talks about, title of the section says apportionment of credit and block credits. Now, what is this word called apportionment of credit? Let me tell you. Sir, whenever, for example, let's say there is a phone. Let's say Shivateja is a manufacturer of this phone. When I want to manufacture this phone, I require a lot of raw materials. Only then I manufacture this phone. And let me tell you, my phone is a taxable product. So whatever raw materials I use to manufacture my phone, I definitely will take input tax credits. Correct? But let's say, assume for a second, my output is exempted. If my output is exempted, then can I take input tax credit? Obviously, no. You think from government point, guys, why would government give you credit when you're not paying output tax? Correct, right? So law told if output is exempted, then input tax credit is not allowed. If output is taxable, only then input tax credit is allowed. But let's say for a second, you are using some raw material or using some goods or using some service, both for taxable as well as exempted. Then obviously you are using it for both taxable and exempted. In that case, you will apportion what is towards taxable, what is towards exempted. Yeah. Rule 40 for inputs and input services, and Rule 43 for capital goods. So like that, we have got two rules which talks about apportionment of credit. I really want you guys to focus on that. Yeah. We have got a question from Seshadri again. He is talking about ITC on capital goods, which has to be taken in 60 months. Seshadri, let me tell you that in case of capital goods, we are eligible to take 100% credit. That story of 60 months will come only in case of common credit. That is what I was talking with you 2 minutes back, where I was telling very clearly that when any capital good is used for both exempted and taxable, then we'll do something called apportionment. Even in that case only, for the purpose of calculating reversal, we do that 60-month story. But generally for capital goods, we take full credit. For example, recently I got one laptop. On that I paid GST. 100% credit I have taken. There's nothing called 60 months. 60 months concept is only in case of apportionment of credit, but not in normal case. Please keep that point in mind. Next, in section 17, guys, we have got one more point called 17 subsection 5, which is very important, which talks about block credits. Block credit deals with the concept of cases and circumstances, other words, goods or services where input tax credit is not allowed. That means even though we use it for business purpose, still credit is not allowed. Basically, you need to bear in mind some important points like credit is not allowed in case where goods are used for personal purpose, in case where goods are lost, stolen, destroyed. And one very important point, credit is not allowed in case of motor vehicles, which has got a seating capacity, which has got approved seating capacity of up to 13%. If it is more than 13, then definitely credit is allowed. So if it is bus, credit is allowed. If it is normal motor car, credit is not allowed. So if Shivateja buys one car for official use, even though it's official use, still I cannot take input tax credit. But let's say Uber or Ola, these kind of guys buy one car. They are in the business of service of transportation of passengers. Those guys can take credit. Next situation. There is one driving school which will impact motor driving schools, which will impact, basically I'm talking motor driving school, which will impact driving skills. If these guys buy a car, they will definitely be eligible to take input tax credits. Next. One question from Vijaya. Whether input is ineligible for services of repairs and maintenance for vehicle or both for good services involved. Let me tell you, in case of motor vehicle, if you can't take credit on motor vehicle, you can't take credit on repairs and maintenance and insurance also. But if it's a bus, or it's a case where motor driving school, or it's a case where it is for transportation of passenger, or it's a goods vehicle, that is a case where credit is allowed. Where credit is allowed on motor vehicle, credit is also allowed on repairs and maintenance. If you can't take credit on vehicle, you can't take credit on repairs and maintenance. That's very clear. Next. Moving forward, guys. In block credit, we have got very important point, which says that credit is not allowed even in case of works contract service for construction of immovable property. That is, if we take some works contract service is a contract where both goods, services, both are involved. For example, I call a painter and I tell him, boss, you only get your paint boxes and you do the paint. That is, do both goods as well as service. That's technically called works contract. In case of works contract service for immovable property, credit is not allowed. But credit is allowed in two cases. One, if it's an input works contract service taken for output works contract. Second, credit is allowed in case where works contract service is taken for construction of plant and machinery. Plant and machinery means any machine or equipment or apparatus, but does not include three things. That means these three things we can't take credit. One, land, building, civil structures. Second, telecommunication towers. Third, pipelines laid outside the factory. On these three things, we cannot take input tax credit because those three things are not covered in plant and machinery. So these things I want you to keep in mind. So 17.5 block credits is very important, guys. So you need to know that you will not get credit on food and beverages. You will not get credit on renting of motor vehicle. You will not get credit on beauty. You will not get a credit on life insurance, health insurance. You can't get credit. So please keep that in mind. Very important. Next, let's answer a couple of questions. Bachu has got a question. Construction has happened for business purpose. Can we take ITC on that for 17.5? Can we claim ITC or capitalize in the books? Let me tell you, you cannot claim ITC in relation to any goods or services for immovable property. And moreover, you cannot take ITC in case of works contract service for construction of immovable property. You cannot take input tax credits. And in case of goods and service, they clearly told goods and service taken for construction of immovable property on own account, you can't take credits. But if it is taken, wherein basically you are a construction company, you have taken some cement, sand, steel for constructing an apartment which you are going to resell, in that case, credit will be allowed. Next, guys, moving forward, section 18 talks about availability of credit in special circumstances. I really want you guys to focus on that area, wherein section 18 talks about availability of credit in special cases, like 18.1, where in that section you have got concept like how do we take credit in case of new registration, voluntary registration, and in case of conversion from normal to composition, composition to normal, exempted became taxable, taxable became exempted. These things are very important. I really want you guys to focus in the exam, because question will come in the exam, highly possible. So please do that really well. So these are the important focus areas in section 16, 17, 18, guys, when it comes to input tax credit. Do that really well. Apart from this input tax credit topic, guys, we have also got small topics like tax invoice, payment of tax, returns, few small topics where 2 marks questions keep coming generally in the exam, even from e-waybill also for that matter. So we have got different areas in that small topics, guys. But one thing is very clear, when I talk about preparation point of view, guys, let me tell you, there are some topics which are short to come in the exam, such as registration, supply, time of supply, value of supply, input tax credit. I repeat again, there are 5 topics, that is registration, supply, time of supply, value of supply, input tax credit. These 5 topics are those generally every time they are coming in the exam. See, I'm not telling that they will come or they will not come. If I tell that and if you listen to that, it's a big joke, because we're writing an exam called CA exam, that we cannot guarantee any particular question. It just depends. But when I'm telling this is important, that's based on the past experience, on the past papers, how it has come in the exam. These are the 5 topics where there is a key point and key focus in the exam. And let me tell you guys, when you talk about presentation in the exam, I always want your answer to be split into 3 parts. I'm talking about a question where problem solving is not involved. Problem solving, please present very clearly. Please solve very properly, step by step. You show the workings and show properly there. But when you talk about a theoretical answer where you answer a provision or a concept, split your answer into 3 parts. Part 1, you talk about the provision or concept. I mean, you don't write there part 1, part 2, part 3. This is not Bahubali movie. So please, split your answer into 3 paragraphs. First paragraph, you talk about the concept. Second paragraph, you focus on the interpretation. Third paragraph, you talk about your conclusion. That's how you present in the exam. That's very important. Please do that really well. And let me tell you guys that in the exam, one point is very clear, guys. How much ever we prepare, how much ever we do it, ultimately, situation is that our paper, what we are going to write, will decide our marks, decide our future, decide everything. So it's important that you present really well. And people have a thought process that presentation is all about handwriting. It's not like that. If you learn the answer really well and write properly, that's very important. It's not about how beautifully you write. We have got one question from our friend, sir, section 9.5 explains, sir, one-time revision, please. This is a question which I'll take now. Other questions we'll answer subsequently after the video is over. Yeah, so section 9.5, guys, 9.5 talks about certain notified services. When they are rendered through e-commerce operator is liable to pay GST. That is, so far 3 are notified. That is, service of transportation of passenger by way of radio taxi, motor cab, maxi cab. Second, which talks about hotel accommodation, except when hotel is liable to be registered. Third, it talks about housekeeping services. Third talks about housekeeping services, except when person providing service is liable to be registered. So these are the 3 interesting services when they are provided through e-commerce operator is liable to be registered. That's very important. So keep that point in mind, guys. So friends, I really wanted to spend some good time with you guys, especially on giving you an insight of what are the key important areas in our syllabus. At the same time, you also get some good conceptual clarity. How do you present in the exam? So do really well, guys. And at any time, any help you want, any queries you have, feel free to reach us out. Definitely will be more than happy to answer. Indigo Learn is always there for your support at any point of time. And consider the situation and the market circumstance outside. ICA has already extended the due date from May to June. I mean, the exam dates from May to June. You have got 1 month extra time, guys. So do really well and try to make sure that you present really well in the exam. And anyways, we're not going to go out of the home. I'm also at home only. You can see the background. So everybody is at home. So please utilize your time in the most effective manner and do really well, prepare really well, and rock in the exam and come out with flying colors. And for the benefit of all our students, we already launched our bite-sized modules also. In case you require any particular topic, any specific topic you want to learn, you can access that from an Indigo Learn app or Indigo Learn website also. I mean, if you want bite-sized, you have to access the app, and if you want separately, you can anyways access to Indigo Learn. We're always there for your support, guys. Thank you so very much. Wish you all the very best. Wish you all success. Thank you so much for your time and support. And once again, sorry for postponing our session one day because of technical issues. Nevertheless, we're always there for your support. Thank you so much. Take care. Bye-bye. Thank you.